Good morning, everybody. I'm ready, JT, TJ. The background, I think, is Dan has his mic on. No biggie. Nothing X-rated going on there. Okay, let's get it going here. Let me get some charts up. All right. So last night, my thought was anyway, a gap open could be a gap in crap since things have been moving up, some more than others, some more vulnerable than others. So the Russell has been doing great. I mean, it was one of the worst things. The Dow came down, started the way down, rolled it over, and then came down real hard. And now it's bounced up. So the Russell, I'm looking at the ETF here. You can see where it closed near the high of the day. As you know, we always try and point out some type of educational information to take away into the future in the charts. So one of the things that I've noticed over the years, and this is only a few days up, but I've seen prices go up in a similar way to this over the course of, say, 7 or 8 days as they reach resistance. And a lot of times what you see after a corrective move like this is that there's always this little bit of selling, in the bar. So as you look at the bars and you see that they have tails on the top. Now, these aren't that big. It started off really nicely off of the low, but you got a little tail and a little tail. And then there was a bigger tail as it got into this thicker area here. And then yesterday pretty much closes at the high. And when I've seen that after multiple days up, sometimes it's a wide range bar. I wouldn't really mark this off as a wide range bar. It's got a tail on the bottom. So there was the buy the dip into the gap fill. But when they close near the high, it's just another tell as to it's close to the end of the move. It doesn't mean it's going to collapse, but odds are the momentum's going to stall. So we know that by looking at the chart. But now, as it's gapping up, we see it's at 332 and a half. So it's not gapping up big. If it was gapping up here, I'd be much more confident in a gap and crap. So it's a relatively small gap, but we'll see how it plays out. Dallas could be like shorts exiting, sure, in that, well, it's two things. It's emotional at the end there as far as having to get in. Now, that could be shorts covering that's saying, hey, I thought this was going to go lower and it would have gone sideways in the next leg down. Didn't do it. And as it went up, as it did, yeah, shorts would say, hey, enough's enough, and maybe today the gap up, I wish it was a more excessive gap, would have been like the shorts really, puking it out. And, then that exhausts itself, that buying, and then it comes back in again. So, we'll see. I said it would have been much better if it was a bigger gap. So again, 332 and a half, just going to down there. It's really not that big a gap, but this is resistance here. You could see it there to the left. So we'll see how it plays out. Looking at the diamonds, yesterday, I know I said in the room that this one had the better potential to make a more meaningful move, and it did. And it was because of the void, and you can see it's still kind of inching up there a bit. And so as this gaps up let's call it 344, it's pretty close. This one I like a lot better for a gap and crowd, because that's a bigger. I'll come up at 345 there, 344. So around the 20 MA, not bad. It's coming into that resistance area there, 344-ish. No, it is three. Yeah, it is getting close to 344. I'm gonna get new glasses or make these fonts bigger. Anyway, it's coming up into this congestion area there. So it could be something that gaps and craps. Doesn't always have to be right at the open after 5 minutes. It could be 10 o'clock as it jiggles around, but I'll be watching for that. And the spiders. Right, so that gapped up right into resistance, and it didn't give it up yesterday. So this now is up a bit, 426-ish, right up here. You would think, well, you see this little congestion area right there. Right? What a tiny little range of just back and forth, back and forth, back and forth. And now it gaps up here. However, this created a little floor, so to speak. So you got to get through that to really start thinking it's going to have the potential to fall. So, we much prefer, right, any kind of a pattern that had an end of day rally and then gaps versus like this, an all day base and then gaps. Yeah. So not the ideal. So what would have been good if this was actually gapping down just under the low? That's not happening. So we'll see. We'll see it's still holding up over here. Qs. That gapped up yesterday, but held up really well. So again, buyers still in control. They bought the dip, couldn't get it going. We got a little topping tail there, and things are, I guess, relatively flat where they are here. So no patterns here that are just jumping out like, okay, this is something to really point us in one direction or the other this morning. Things are up enough. This looks like potentially would make sense for it to be a short-term exhaustion gap. It has made new all-time highs. It's Friday. We'll see where it all ends. But this price action, I change that back to the weekly. That price action there was questionable as to the ability to turn over, but bottoming tail, gap reversal, bottoming tail, bullish price action up there. And now the weekly chart has made new all-time highs, and it's exceeded the prior high. And until we break a prior week's low, which we haven't done, you can't think things are too bad here. That being said, yesterday we reviewed, the video that I made that prior week, the tale of two markets. And we've got the transports having broken down, and we went through, materials having broken down, and metals and mining, and, other sectors that are, economically sensitive or predictive of so on. And now we got FedEx gapping down, big this morning. So it's kind of a weird market, has been for a while. Looking at the futures, we can just see, slowing momentum candle up there, up at making new all-time highs. So as far as SPX, there's a relatively big open interest at 42.75, which should be some sticking point. And last I looked, there was acceptable premium at Oh, 42.95. It looks like it came up a little bit. And so 4,300 is going to be a big sticking point. Right? That's what I think. I mean, having gone up this far. So 42.95, versus whatever else you want to sell. When it comes to SPX and zero expiration day, you got a zero expiration day on almost anything. We deviate from, hey, 5 wide, 10 wide. It doesn't really make a difference if it's 40 wide. You better be right, especially on SPX, or it's going to hurt either way. So, there's enough premium there to go to like 42.95, and you got 4,300, which has got a relatively high open interest and a big whole number, which should be more difficult to get through. So I think that makes sense. This is going up for the moment. You may get more premium in the first minutes or 20 minutes if it keeps going up, and maybe you can get above 4,300. So once you have some type of a red bar, hopefully, a larger red bar to the downside, go for it. All right. WAM futures. So it's up against the 20 there. Got this resistance, give or take. Let's scroll this over a little bit. You can see the congestion area that's up there. And it is an area. We don't look at things as being pinpoint. So we'll just follow this. And so one of two things to look for. It's made a new high. Does it immediately get rejected, forming an M type of a top? Or does it, get up there slightly more up into that area and then maybe have some type of a breakout failure? So different patterns to key off of depending on how it happens. But right now, pre-market here, we see a wide range bar igniting off of the 5-minute where the moving averages are clustered together. That's a good long pattern, and it's grinding up, and momentum starting to slow a little bit, but still buyers are in control there. And impressive turnaround this week, pretty much everywhere, with a big red bar to the downside. And it's Friday, anything could happen, but
Actually, Tom,
I don't think buyers are going to just totally throw in the towel here. Hold on, Dan. I gotta turn something on here. I couldn't hear you. Go ahead.
no, never mind. I'll wait. Thanks.
Okay. All right. So we'll be looking for that turn, potential turn. Russell, and this chart is messed up. I don't know which one he signal, but this would be, so we've got a rounding kind of a bottom pattern here after a push up. Now, push up, pull back, push up, sideways, kind of like a climactic type of a run, wide range bar ending, but it created support with a rounding bottom, which suggests it's going to go higher. So it's a decent long pattern looking for maybe something additional pop in the first half hour or so as it gets closer to this area. That said, a break below that 60-minute bar, let's just, maybe it doesn't go. And what you see what's happening right here, that topping tail that's beginning to form. Well, if this just tanks at the open, so I don't know what's going to happen. Right? We all know that. None of us know the future, but we know patterns. And I know that this pattern, which is bullish, was to immediately fail. It creates a shock. And what are traders going to do? Well, if this pattern fails, they're going to look to exit longs. And there's a void below, which opens up the door to shorting opportunities. If it holds up and it keeps, and it's pushing higher, it could get all the way up here. So we look at what is, we look at what the probabilities are in multiple time frames, and then we trade and adjust accordingly. Right? Proper thinking. Strike on the put side of SPX. Honestly, I don't think there's going to be much premium there. But hold on. 42.35, 40. Where's SPX? Oh, you've got this pivot, 42.35. Or wait to see, you could do that. I mean, if it's going up and if it starts heading down with a vengeance, you know what you have to do. But at least you've got a shelf, and you've got a shelf, as your lines of defense. So 42.35 has enough premium, whatever wide you want to do. And so this is rallying up toward, yesterday in the room, I said toward the kill zone. It's not quite there. And but this is one of the breakdowns that occurred. And that is a short-term bearish. So we've got these other equity markets that are doing well and transports that are doing terribly. And, I still have the memory from, going into 2000, March of 2000. And this is not March of 2000 because it was a very different market back then. People think this market is strong, which it is. 1999 was Superman on steroids. But, back when the market topped out and the yield curve inverted, and that is what kind of got the markets, fearful last week and this week, was that there was some movement toward that. And that's still out there lurking, but things have stabilized. But the transports were leading the way down for quite a long time at that point, but nobody cared. But this is something just keep in mind, tech's doing great, S&P's up at new all-time highs. And this is, kind of what I call as one of those flies in the ointment that says things aren't as rosy as they appear to be. But as long as you're trading the right things and you got a money management plan, you're not going to get, you're not going to be roadkill in the stock market. All right. Oil just continues to be doing well. Was that? Let me just look down here. There we go. I knew that didn't look right. Yeah, it's just hanging up there at the top of the wide range bar. So it's coming up to that 75 area where we know there's some resistance. We'll see what's going to happen there. And gold, it's still trying to lift off from this area. It hasn't been able to do it. The dollar, it's just been hanging up there. So it's not giving it up. If it does start to pull back, this is a power move up, which is not good for gold, which, this kind of a pattern is there's going to be buyers in a pullback. But if this should pull back into this unfilled gap, well, gold just might have, a counter trend bounce, which could be, pretty big for short-term traders. I'm keeping an eye on that. Silver, that actually looks a bit better. That rounding bottom and the topping tail that didn't follow through. It's up at resistance. And Bitcoin couldn't get going very much. This created that void. You can see it here, move down in the shakeout. And so this is a MTS concept that we call creating resistance. So as prices are going up into a void, and MTS is built on what I call a thought process. And once you have one thought and you put your money at risk on that thought, all kind of weird things start going on inside your head. Right? And this is why you need an objective thought process that forces you to change. So, for example, as this is going up and you had this shakeout, and this goes and you're saying, hey, resistance is up here. Bitcoin has lots of room to go up. Okay, terrific. Buy the pullback, buy some bullish pattern. but that created some resistance. Now, based on the move up, it should be able to keep going. Well, it takes it out. A lot of times we use the word, it made a peekaboo new high and then came back down under this pivot low, which makes one of those, what we call a bonus type of M top, where it makes a new high and then fails. In other words, it had the opportunity for buyers to do something meaningful, and they failed to do that. Now, it is coming down, right? The thought process is, well, it also created support on that hourly chart. Can buyers step up and kind of create a new line in the sand, a battle where it begins to make a trading range now? And so does it rattle around here and the next leg down, which you say it's going to go much lower? Can it survive and come back up again? So unless you're a scalper, it's a kind of pattern whereas, hey, just stay away for now. And it's not a good swing short. It's not a good swing long. Intraday, if you're a scalper, maybe trade a bounce off of here. But, if it breaks through here, when this weekly chart starts to suggest a significant move to the downside. So we'll see how it plays out today and into next week. And then, of course, we'd be looking at, coin and all those other stocks that are move with this. I think that's about everything, Dan, we cover. So we'll see how it all shakes out here today. Good trading. All yours, Dan.
All right. Happy zero DTE day. So I already posted one on BB, BlackBerry. Yeah. And so all our opens are fine. I made a couple of adjustments. If you aren't in, don't get our Telegram alerts. That's, buyer beware. But I tightened the stop 30-minute low on Lulu. We've been in this beautiful 1, 2, 3 for a while. Greg mentioned coin. We have a condor on this. So obviously like the gap down. Sam, your drop down. What else do I have? Okay, so BlackBerry pre-market breakdown here. Let's try to short the 13 and a half naked calls. We have naked or put spread on GME expiring today. That looks great. It looks fine. We have one on the number of these expiring today. We have a ton of bull put credit spreads open. We've had a very active week. We have one Tesla put spread that expires today, one for next week. So just ask me if you have any questions on any opens, but everything looks fine. Actually, Amazon, we did one call spread yesterday. And if this takes out a 30
All right, guys, I guess Dan has got issues there. Thanks, Carlos. Yeah, I'm not sure what he was gonna go over there. I see he's in the room there, but and I just shifted my e-signal over to my other platform. Hold on. So as I know, he was probably going to mention Amazon, which is an open call spread. I'd have to look at the others. You can type them in the room. I can go over them. But someone in YouTube asked about Space, SPCE, that's gapping up. I know that was part of discussion in the room yesterday. So I think you guys were in it. Some were in it. I think last I saw it was gapping up like $4. So, put a stop under a 5-minute bar's low. Man, it's a beautiful move. Actually, that bar is actually live. Yeah, that if they do that, you could see the 5-minute up where it is at, and it's up near, getting close to $50. So that's a nice move. Whether it can hold on to that wide range bar, who knows? But it looks great. When I was an idea yesterday on an open position that I suggested selling an out of the money call. And if you like this to hold on to it, why don't you take a look at that and maybe sell a $50 or $49 call expiring today?
Yeah, no, actually, yeah, we have a put spread on this, and that's one of the ones I adjusted. I said bid 2 cents, just take your money, or a 30-minute low. So I gave this pre-market. Yeah, Greg, that one that we did yesterday was this one, RVLV. It actually kept going. We did it right here in the afternoon. So we sold the 69s for 95 cents, and let them have it. Let them have our merchandise if it gets assigned. If not, then into the close, we'll sell another call for next week. So that was perfect. All right, BlackBerry I mentioned. Let's see if we can sell a call. I don't know where the prices are. Fed Nike, monster gap. When you get monster gaps like this into earnings, or on earnings rather, and it's been rallying into earnings, then my bias, if it can't go anymore, like 15-minute low, I'm not this aggressive in the first 5 minutes particularly on earnings. But if it can't bounce in 15, 30 minutes, this is a great 0 DTE trade. The 155s right now, 115 by 129. I would not do it right now. I don't have enough data, but I definitely favor for the day, the downside. YouTube plug. Not sure what your question is, Thomas, on plug, but we actually have a put spread on this, and it's a bull 1, 2, 3. So if it does take out these highs next week, preferably. All right, a couple of by pennies. This internet is driving me bananas. All right, BMC, nice big, the gap's too big, but I think that's an infrastructure gap is my guess. cat, deer. You know what? We'll talk about it later. I don't want to do it now, but they're all powwowing that they had a bipartisan, the $1 trillion bill. But then Biden says, "Well, I ain't signing it unless you give me my other pork belly things." So it's like,